CNBC TV18. I believe that this is your first day back in office as well. So let me start by asking you about the tweet that you've put out this morning. And I'm just going to read out the abridged version. You talk about global economies opening up. You say we should too. We as a country need to get back to our full capacity at the soonest to be the successful economy that we aim to be. The slower we are to restart, the more we lose against countries out of lockdown. We cannot lose any more time. Implicit in that tweet seems to be a sense of concern about the pace at which we are restarting.
Yeah, because, over the last 2 months or 2.5 months, I've been pretty mobile. I've been going to the plants, my factories, and the factories have been running. But when I meet my friends and people or speak to various people, there is a lot of fear. And also the fear is emanating from the newspapers and from the TV that this pandemic is really growing and everyday numbers are growing up. So my worry is that people may not come back to work very easily.
Okay.
But, it's very exciting to be in office. I want to reassure my colleagues all across the industry that it's very nice to be in the office. Keep your, basic fundas very clear, that keep social distance,
yeah.
Keep you wear the mask as we wear shoes, and keep hygiene standards very high. Keep washing your hands and keep yourself, very clean. So therefore, there is no problem. What is most important in my view, Sheeren, is that you have to keep your immunity levels high.
Yes.
Stay fit, physically fit, do your workouts and exercise yourself. Keep your immunity high, and that will keep you pretty safe.
Yes, I think that is the checklist to follow. But Mr. Jindal, I want to pick up on the point that you made, that you also believe that there is a sort of psychological fear that may prevent people from coming back to work. Now, we were talking to Mr. S.N. Subramaniam of L&T this morning, and he was talking about how he believes that is going to be a big factor in discouraging migrant labor to return to work, and that corporate India may have to, in fact, offer some sweeteners to get the labor to return to factories and to plants. Now, what is your own observation? I understand that all of your plants are functional today. How do you see this playing out, and do you believe that the labor challenge is going to be a crucial one as we move ahead?
So there are two aspects to this. One is that the labor is migrant labor. That means not permanent labor. So that is, of course, a challenge because they have left the work. They have gone home and they have suffered a lot while going back. So therefore, they will find it a little bit difficult to come back. And we have to definitely incentivize them to come back. And I believe immediately we have to provide them, but they are mostly involved in construction. They are not involved in day-to-day operations, especially in the large corporations like ours. We don't have any problem with our employees or our workers because they are all residing in the place of work. So we have provided nearly 100% of the accommodation to all our employees, all our workers. So there is no problem for us to restart, or we never had any problem.
Right.
But we are facing, majority of our projects are being built by Larsen & Toubro, and they are facing a huge problem in the migrant workers because they have all left. And we are really struggling because we are in the middle of completing our major expansions in all our plants. And that is one area where we are suffering. And we are in fact in touch with Mr. Subramaniam to how to bring back the people and how to restart the projects. That's the challenge.
So restarting projects is a challenge that you're facing on account of outsourcing that to companies like Larsen & Toubro. You yourself are not having to face issues when it comes to migrant labor. But Mr. Jindal, let me ask you about the demand outlook as well. Now, as far as exports are concerned, and I'm looking at the latest data, finished steel exports have seen a fairly healthy trend. But what about domestic demand? And do you believe that the export trend that we've seen is likely to continue?
So I think, we started our steel production, we shut it down for a month, and then we restarted after let's say 20th of April. So for a month, nearly a month we were shut down. We started ramping up our capacity. In the month of May, we came back to 85% of our capacity. In June, we are running flat out. Earlier in the month of May, we sold about 35% domestic and 65% were exported of our production. This month, in the month of June, I would say 50% is domestic and 50% export. July, our projections are that 40% would be export and 60% would be domestic. So I think gradually the industry is opening up. The auto industry is coming back, though the auto is still a bit sluggish, but at least it's coming back. Mm-hmm. So we are sure that over a period of time, we see that it will come back to normal by September, October. We feel that it will come to a normal situation where about 80% is domestic and 20% is exports.
Okay, so you expect normalcy to return by October when 80% will be in the domestic market and 20% will be driven by the export market. But let me also ask you, Mr. Jindal, about the Prime Minister's call for Atmanirbhar Bharat and what that means, for instance, as far as the steel sector in specific is concerned. Now, I think across the board, industry that we've spoken to are very clear about the fact that an Atmanirbhar Bharat should not be a protectionist India, it should be a competitive India. Now, what is it that you would like to see as far as the steel sector in specific is concerned? We already have mechanisms in place when it comes to duties, anti-dumping, safeguard, and so on and so forth. So how is it that you would like this to be interpreted from the steel sector's point of view?
No, I think this is a very important initiative or reform that the Prime Minister has announced about Atmanirbhar Bharat. Primarily, we given the capacity that we have built in India, not only steel, but the majority of the industries, we can be Atmanirbhar. We can be self-dependent. We can generate a lot of capacity. We can generate a lot of goods ourselves. But government has to incentivize a little bit industry to become self-reliant, and that is by way of, as you said, that we have a lot of protection already. We have duties and we have other things. But Sheeren, mind you, we also pay a lot of taxes in India, which we don't get refunded. Those taxes do not come back to us. And when we sign FTA with countries like Japan and Korea, which are very developed countries, and they are also export-led countries, they then send materials to our country they don't have to suffer the taxes and the duties that we Indian producers have to suffer. So we are already in discussion with the government that they must bring in a mechanism where they equalize this import duties, or through import duties, or through some structure where we as an Indian producer should get back those taxes.
So if I may interrupt you there, sir, what is the tax disadvantage that you're pointing out to? And do you believe that a border adjustment tax, for instance, which is a proposal under consideration and is under active review of the government, is that the way forward? And what is the disadvantage on account of not being able to avail of the tax benefits that you speak of?
Yeah, right. So, for example, when we produce steel in India, we have to pay electricity duty, which the state governments levy on the electricity that we produce. Still, we have to pay the electricity duty. Similarly, there is royalty on the raw materials, on the iron ore, on limestone, all the royalties we pay, which the Japanese don't have to pay, the Koreans don't have to pay. There are other duties like clean coal cess, which is GST, what is it called, something like that. But that we don't get paid, and the Japanese or the Koreans don't pay. So all these put together comes to about $40.
Okay.
So this is going to be that's what is being discussed in Delhi, that there would be a border adjustment tax, which will bring level playing field for the Indian producers.
Okay.
It's very important that we do not suffer any disadvantage versus our exporting countries.
Okay, so you're saying that the difference or the what makes us less competitive, the difference is about $40 per ton? per ton. Okay, that's how you're looking at it. Since you talked about coal, Mr. Jindal, let me ask you this. The in-principle approval to allow commercial coal mining goes all the way back to 2015. And since then, we've seen the cabinet approving it and so on and so forth. But yet, on the ground, not much has changed, not much has moved. What do you make of that?
You're talking about the coal mines?
Yes, correct.
Yeah. Though the cabinet had approved about the commercial mining in way back in 2015, but nothing much really moved because the government tried to auction the mines and the premiums went very high because the government was bringing 2 or 3 mines at a time, and the industry thought that we don't know when the other mines will come up, so they bid very aggressively and bought the mines at very high premium. And then they decided, when they realized that they paid too much premium, they never operationalized those mines. So actually the whole government's concept of privatization failed because the government tried to maximize the value for the mineral, and then that completely failed. And also the industry, they did not work in a proper way, and they overpaid, and therefore they never, except for a couple of mines, I'm told, no other mines are operating. This time around, I think the government has come out with a list of 50 mines, and a large amount of mines are being offered to the industry, and it's for commercial mining. So therefore, this time around, I believe it's a very much better way of handling things, and government is not trying to maximize the value.
Okay.
They have said that we will have a revenue share in the mine.
Yeah.
And these are all the suggestions that the industry had put forward to the government, and government has accepted this. Because the idea of the government is not to maximize their returns on the minerals that is inside the ground. Idea is to use these minerals to maximize the industrialization of the country.
Right.
And that is what will happen now by doing this. I'm very sure that over the next couple of months, the mines will come up coal mines will come up for merchant mining auctions, and that would be a success.
You believe that merchant mining will finally take off and be a success. But, you spoke about privatization, Mr. Jindal. Let me ask you that in the context of the latest view from the government that they are going to identify strategic and non-strategic sectors. And in non-strategic sectors, they are going to look at offloading public sector units, maybe leave 1 or 2. Now, are you looking at any assets in the areas of interest if they were to come up on the table for you?
Yes, definitely we will be looking at assets which are within our industry and which fits in with our operations. So we will certainly be open to the idea. But my worry is that the government is very slow in disinvestment, and the more they delay, the more the value is getting eroded. That's my big worry. And this point needs to be taken up in the government that the process of disinvestment, there has to be a very somebody who has to be a disinvestment minister who has to be given this task. It is right now Deepam is under the finance ministry, and finance ministry is right now has got too much of workload and too much of they don't have any time to look at how to do the disinvestment. Because there has to be a very strong minister who should really lead this disinvestment, and there should be a task given to him to disinvest these public sectors. Because the more the government is delaying, the more the value is getting eroded. You have seen in BSNL how the value has got eroded. You've seen in Air India how the value has gotten eroded. There's so many cases where the value is getting, every day the value is getting eroded. So the government would do a real good work if they really fix this whole problem.
You said that you would be interested. Anything that has caught your eye, anything that you have evaluated so far, even though we're still waiting to hear from the government?
No, Sheeren, we have not evaluated any projects or any companies as of now, because as I said, the process is so slow that we can always evaluate once the list comes out.
Okay, let me move and ask you a related question, and that has to do with Bhushan Power, because the matter continues to be in court. I don't expect you to preempt what the court may or may not decide, but do you continue to have faith and belief in that asset? It's a bill of almost 20,000 crore rupees that you will have to pay up.
No, absolutely. I mean, we have already committed, and we have given our resolution plan. We have no intention of backing out of our commitment. We have never done that in the past, and will not do it. So we are fully committed, but we are awaiting Supreme Court's decision. They as long as it is within our resolution plan, we will go ahead.
Okay, so there's no question of backing out of this transaction. You're sticking with the plan to go ahead with Bhushan Power, pending, of course, the court's decision.
That's correct.
Okay. Let me also ask you about debts. And the debt, if I remember correctly, is to the tune of about 53,000 odd crore rupees. What is the debt reduction plan at this point in time? How are you looking at the situation as you move forward?
Well, even last year, which closed in March 20, we had a plan to reduce debt by over 5 to 6,000 crore rupees. Because of this lockdown, a lot of our plans remained incomplete. So we have plans that we will while we are doing our project completion, there's a capital expenditure which we have moderated for this current year, but still we will not be increasing our debt from these levels. That's the projections. That's the projection we have given.
Okay, so you're saying you won't increase your debt, but the plan on debt reduction has been delayed or has taken a setback because of the current crisis. So what is the reasonable expectation then to return back to that objective of bringing your debt down by about 5,000-6,000 crore rupees?
Yeah, if we are, we hope that next year we will definitely bring down the debt. And by that time, our capacity also. So what is very important, Sheeren, is that right now we are in the middle of completing our 5 million ton expansion in Dolvi, and for a 2 million ton, 3 million ton expansion of our downstream, that is cold rolling and galvanizing, color coating, and electrical steel plants. So these put together is a capital investment of close to 35,000 crore, which is just about to complete.
Okay.
And it got delayed because of the COVID. But hopefully by December or latest by March 2021, we will complete these projects. So then we will be having about 23 million tons of capacity in JSW steel, and plus we will have Bhushan and on it. So put together we will be close to 27, 28 million ton capacity steel company. And with that, 53,000 crore is not a big debt. So I don't really see, though we are still targeting to reduce the debt, but on the other side, as we increase our capacity, we believe that this debt will become look much more reasonable.
You spoke about your capacity expansion plans, and you believe that this 35,000 crores, most of this should be done by the end of this year, or at least by March next year, which means that you will not be looking at any fresh investments, at least in the near term, for the near foreseeable future, I would imagine.
Yeah, not for this year. Certainly not for this year. Till we complete these projects of 5 million tons in Dolvi and the 3 million tons of downstream, till they start to yield results, we will not be investing new money.
Okay. What would be the big concern outside of the issue that you spoke of, which is tax related and that $40 disadvantage, which you believe makes the Indian steel industry less competitive compared to global peers? What would be your chief concerns as you navigate through these volatile and uncertain times?
No, I mean, though, I believe that India still remains a very competitive, as far as steel is concerned, we remain very, very competitive. And we are really, even if this border adjustment tax was not to come, it is not that we will not be, viable or will not be profitable. I don't think that's a big worry. But this I'm saying because JSW is a very efficient steel company and very competitive steel company. But the smaller steel companies would find it very difficult if the imports were coming in from FTA countries at zero duty. And also it is not a level playing field for the industry. That's why this $40 kind of border adjustment tax is a must. But Other than that, I don't think we have any concern except for the auto industry. So we have to see how auto industry bounces back, whether it comes back to its original levels, or we will see a 20% negative growth. That's what the projections are. That this year we may end up 20-25% negative in the auto and 15 to 18% negative in steel. So that is the concern, but still everybody is looking at it to address it.
Yes, we still are waiting to see what the demand outlook for the auto sector is going to mean. Last two questions to you, sir. You talked about deleveraging plans, and you said that perhaps is a goalpost that you will now address sometime next year. But what about the possibility of JFE picking up additional stake? Is that something that could be on the anvil, could be on the cards?
No. I don't think we have ever discussed even with JFE to pick up any stake. They are very happy, and we are also very happy at this level, and we would like to maintain it this way.
Okay, you'd like to maintain it. You had aspirations which you shelved with the car business that you wanted to get into, and I know that was something that you were personally quite keen on taking forward, but then the board decided not to. So outside of the current businesses, is there any rationalization that we should expect? And as far as further expansion or diversification, anything on the cards, or have all other plans been put on hold for now?
Not really. I mean, steel remains our mainstay, and that's very close to my style of working. I like steel business. That's the mainstay. Other than that, energy is another business which we are trying to expand, and primarily we are going into renewable energy. That's one area where we are really focused, and we are really working on the expansion of our energy business on the renewable side. We are not doing any more coal-based expansion. We have put a cap on that, and now our further expansion is all on renewable. So that's another area. Other than that, we have our infrastructure, which is doing well. These are this is it.
I'll pick up on the last point that you made, sir, that you are going to be focused, as far as the energy business is concerned, on renewable and not so much on coal. That links back to the question on the commercial coal mining aspect, and you feel confident that this time it will finally take off. But more and more people are now actually looking at renewable as being the future. So then, do you really believe that commercial coal mining will find many takers in this environment?
No, it's a very good question, Sheeren. I mean, it's a very important point that I don't really see that coal mining has a very long-term future, but for next 15 years or thereabout, I still see that coal will play a very important role. So therefore, there won't be many takers this time around for when the auction of the merchant mines will come up. But still, India imports 200 million tons of coal, of thermal coal. So the merchant mines, to that extent, will still be there. But you are right. The coal is a dying commodity, and over the next 10-15 years, it will be over.
Okay. Let me end by asking you about your outlook as far as the economy is concerned, Mr. Jindal. The markets are, of course, on a different trajectory at this point in time, but the macros are telling us a different story. What are the metrics that you're going to be watching out for, and what is your own expectation as far as growth in general is concerned, not just for steel, but for the economy?
I think all the experts have commented between 5 and 10% negative growth for the GDP, which may be a bit aggressive.
Okay.
In my view, it will be closer to negative 5% GDP because we have lost the first quarter, and going forward we will build up very quickly. That's why I put out these tweets that I want. We can't afford, as a country, we can't afford a minus 5% kind of growth. I mean, for Europe, US, it is still okay. For Japan, it is still okay. But we are a country which should be growing at 10%, 12%. And a minus 5 is a real disaster for our country, because we are a country where there are millions people who are poor and who are working on daily wages. And, we can't afford a negative growth. We, as a country, we have to have a plan that how to grow at 10, 12%. And in my opinion, the most important thing that the government needs to address is how to reduce the interest rate to the consumer. If the consumer can be given money at 6%, if the MCLR of the banks can be reduced to 6%, then I believe that then the economy can bounce back faster than we all expect. Because people and the banks have to have the guts to, or they must take that risk to lend that money. Today, banks are neither lending, there are no borrowers, first of all, the banks are not lending, and interest rates are very high. So if these three things can be tackled, then the economy can bounce back and we can probably see kind of a scratch growth rate.
You believe that interest rates will perhaps alleviate the pain that we're seeing and break the logjam of poor credit offtake. But Mr. Jindal, private sector investment has been anemic, not just this year, but for the last several years. And interest rates have in fact been coming down. In fact, just this year, there has been a fairly aggressive transmission of the interest rates that have been reduced by the MPC. So do you truly believe that that's the answer?
No, I mean, as I said that, for example, when somebody wants to buy a house, then his EMI is still very high. We have to bring down the EMI. We have to reduce the interest rates for the corporate sector, private sector. We are willing to invest. But, if you see globally, the interest rates are next to negligible. But in India, we still have MCLR, which is at, I don't know, maybe 8% or thereabouts. So we need to see MCLR at 6% or even lower than that. And that would really, in my opinion, that would kickstart the whole economy. People will start investing. The projects become viable. Everything will change.
Well, let's hope that we do see an uptick as far as the macros are concerned. And to your point on an aggressive restart, which is what you're hoping for, we do hope that we do move forward as we reopen the economy and do it safely as well as effectively. Mr. Jindal, always a pleasure. Thanks very much for joining us here on Restarting India. That's Sajjan Jindal, the chairman of the JSW Group. We will take a break. There's a lot more coming up. Don't go anywhere.